Hello from Motet Markets. This is Ahura with the global economic outlook in the week ahead, which is going to be the fifth week of 2025. As always, first let's check what we had last week, and then we can go forward, go ahead, and see what we can expect from the week ahead. Last week, while it was the first week of Mr. Trump administration and new administration in White House, we had too many orders from him from his side, and also we had his speech, Mr. Trump's speech in World Economic Forum in Davos. That these events and these changes affected the market very much and just made him so much changes. But still, we had some other economic data also to watch, such as central banks meeting in China, Turkey, and Japan. In China, we saw that the PBOC held the loan prime rate for 1 year at 3.1% and 5 years loan prime rate at 3.6%. It was widely expected because we know that central bank and the government in the fourth quarter 2024, they already had too many stimulus and too many supports from the economy. And so now they're the policy of wait and see policy to see what will be the effects and the result of the already made decision. However, with the published data, we can see that these decisions, they are already paying off, and they have somehow a little bit positive sentiment and effects in the market. Forward in Turkey, central bank in Turkey also they cut their rates by 250 basis points or 2.5% to bring down the target rate to 45%. Later on Friday, we had inflation rates, we had interest rate decision in inflation numbers in Japan. Also, inflation in Japan increased to 3%. That's why the central bank increased the rates by 25 basis points to 50% from 0.50%, as it was widely expected. We know that the Japanese economy showing some strong, somehow we can say that strong results. So economy is improving in Japan, inflation is increasing, and we know that the wages also increase the growth, and this wages growth can hold the inflation near to its central bank target around 2%. That's why they are all they were the reasons and the reasons for why central bank in Japan they increased their rates, but they gave a signal that most probably we will not have any other rate cuts by until the last quarter of this year. That's why even the stock markets they had a positive reaction to this decision. On top of that, we had some other important data to watch, including PMI numbers. It's interesting, PMI numbers from Japan, from Asian and European, and the most and United States, generally from the most developed economies. We had the PMI numbers, and all of them they confirmed the stronger manufacturing sector. We know that the manufacturing sector was under pressure for a month, but now with December number, we saw that the manufacturing sector increased, especially with the January prime data. Flash data, we saw that the manufacturing sector increased, and service sector got a little bit pressure, but still generally the data they were positive. We can say like that generally the data was positive, and we can be somehow the positive and optimistic about the economic improvement generally. But as I mentioned, these data mostly they cover the December numbers and December activities, which is the New Year holidays and sales. So that's why we cannot trust much to December numbers. Generally, that was, but I have to mention that the Mr. Trump's orders about the energy, about this increasing about the energy, about the increasing the limits in the borders and stuff like that, they affect the market. I'm not going to go to detail because we already had a video about his orders, Mr. Trump's orders, and it's affecting the market. You can go back and watch that video. That's why generally I say that. But I have to mention about the his speech in the Davos Economic Forum, that in his speech again he somehow repeated the same idea of his speech in inauguration and also in orders. But generally the data they say that Mr. Trump, I mean, somehow is supported to more energy production in United States, export the gases, export from the United States that affected the market. Mr. Trump asked the OPEC to lower the oil price. That affect also the oil market, and also he made a comment about the better to have a lower rates by the central banks, and if they can lower the energy rate, they can ask the central bank also to lower the rates. That was the main thing. But on the energy, on the earnings front, also I have to say that the last week we had again more positive data from most published companies that we had in the week ahead. We have very important week, especially last week. I have to mention about the Tesla. Last week's Tesla had an amazing records and increased the market, affected the market directly. In a week ahead, we will have more earnings to watch, especially from the tech tech, most actually we can say that tech companies like Amazon, like I said, let's go to say it in more detail like this. That on Wednesday we have Microsoft, Meta, platforms, Tesla, T-Mobile, IBM, and also on Thursday, this important reports will continue with the bank, with the Apple, with the Amazon, Visa card, Mastercard, and also Shell companies like energy companies like Shell, and then on a Friday, more energy companies like like ExxonMobil, Chevron, and others. Generally, the week ahead, we're going to have the very important earnings reports, especially the tech companies, and we have to wait for more positive results and earnings reports, which directly can affect the overall positive sentiment in the stock markets. On the economic calendar, the week will start with the Chinese data on the PMI service sector, PMI numbers for the service sector and manufacturing sector. We expect the positive numbers for them. But after the Monday, starting from the Tuesday, we're going to have the New Year holiday in China and some other Asian countries like South Korea, and then sometimes in Malaysia. Generally, the Asian economies in the week ahead will have too much holidays in the week ahead, and in Asian season, we're gonna have the lower liquidity in the market, which increase the market risk. But in the week ahead, focus will be on three banks, central banks in the United States, Canada, and Europe, and then some other economic data from especially the United States. The first bank which will hold its meeting, it will be the Canadian Central Bank, Bank of Canada, on Wednesday, with the lower interest rates. With the lower inflation rates that we had, with 0.4% lowering inflation in December, and then especially we know that in November also we had the inflation in Canada fell by 0.7%, and then in December by 0.4%. While the economic activity is also lowered in Canada, all these results together, they will give us enough reason to expect the Bank of Canada to cut their rates by another 25 basis point to 3% from 3.25% of current rates, which can support somehow the Canadian stock market, but not much. Their economy is not going well. It's not doing well, especially with the possible tariffs from Mr. Trump. But the Canadian dollar will get more pressure. Later, at the same day, the central bank's meeting in United States will finish. The Federal Reserve, the FOMC, the Open Market Committee of Federal Reserve, will end its 2 days meeting on Wednesday, and then we will have a statement and then press conference of Mr. Powell. What we are expecting to see that we don't expect any rate cuts from the Federal Reserve, as we already know that they made this decision. You know that based on FedWatch tools, we have more than 99.5% the chance for holding the current rate, which means that we will not have any rate cut this week. But what we do, generally, we expect 2 rate cut for 2025. If in the speech, or better say, press conference right after the meeting, and FOMC members' speeches during the week, if we see more signals from the rate cuts, for more than 2 rate cuts in 2025, then we can expect more pressure on the US dollar and like support for the stock markets. Otherwise, these expected decision means higher rates for longer, and they can increase they can support the US dollar and put the pressure on the stock markets. However, the stock markets will be supported right now by the earnings reports as well. Later, the next day, we're going to have the central bank meeting in Europe. ECB is expected to cut their rates by 25 basis points to lower its rate to 2.75%. We know that economic activities is weak in Eurozone. Even though the inflation is lowering, but still the economic activity is very weak in the area, while there is a more possibility of new tariffs on the Eurozone economy from United States, especially in auto, for the auto production products, and also maybe wine, the French wine and stuff like that. We have to wait and see, but there are the possibility of putting the tariffs by United States on European economy, European products, which means more pressure on European economy. And now, with the ongoing geopolitical tension in Ukraine, with the political challenges, ongoing political challenges in Germany and France, and generally not a stable economic condition that we have right now in Europe, 25 basis point raise cut is very likely, which will put more pressure on Europe. But I don't think it's going to be enough to support the European stock markets very well. Later on Thursday, at the later, at the same day, in the Thursday, and later after the Federal Reserve, after the ECB meeting, we're going to have the GDP numbers from United States as well. We expect a little bit better than expected, with better, I mean, economic activity and growth in United States compared, especially with the European and other economies, which can support the US dollar again and support the decision of the decision of Federal Reserve Open Market Committee of holding the current rates. And then again, the next day on Friday, we're going to have the personal income and personal income and spending numbers from the United States and PC price index. The personal income and spending and PC price index is especially the PC price index, which is the Fed preferred inflation number or inflation the inflation target, we can say. It is expected to hold the current levels, and we expect to say we can say that with the current levels, holding the current levels around 2.8% for the core PC price index and 2.4% for the overall PC price index, we can say that the inflation still is high with more income, 0.4% for both for income and spending. We can say that the inflation still is high, and with more income and a stronger labor market, we're gonna have the challenging days to bring the inflation down. That's why that's one of the reasons that we expect to see that the Federal Reserve will hold the current rates at its meetings in this week. Generally, these data and these numbers will confirm higher inflation for longer and higher rates for longer, which can support the US dollar generally and hold its gains. Let's go and check the charts, and let's check the charts and see what we can expect as movement in the chart. Let's start with the US dollar index. US dollar index, which is expected to be to get more support by GDP numbers, inflation numbers, and central bank meeting. Most probably, we're gonna get a little bit pressure on the first half of the week, and at the second half of the week, we're gonna get the more support. But we are expecting to levels around 106.60, 107, around these levels, lower at the first half of the week, and then again gaining at the second half of the week. Generally, we are positive about the US dollar index. Holding the pressure on holding the gains of the US dollar may slow down the gold uptrend, but generally, with the ongoing tensions, trade tensions, with ongoing geopolitical tensions and market uncertainty, generally we are still positive about the gold. We may see some correction in the week ahead, but generally the uptrend is still going forward, and we are still positive. But the gold 2,800 is the next target, as we can see in the charts as well. On the energy front, while the fundamental data put the pressure first on the oil, but later with the positive economic activities that we had, and with the more demand, most probably because of the cold winter, and also the lower, we know that what we had as an order and request by Mr. Trump administration to increasing the production is just a plan, and to make it happen, we need a time. That's why for now the supply will not get any changes. We are not going to see any changes in the supply while the demand is still there and increasing. That's why we are positive about the oil price. And technically also we can say that after correction, we can see that the RSI is getting back towards from the oversold area towards 50, and OBV is also increasing the market volume, showing the increase in the market volume and the demand and more put options. That's why we can say that for now oil is positive. We are positive about the oil. Target can be around $76, $77. On the stock market front, as mentioned earlier, we're going to have the too many earnings reports in the week ahead. We are so positive about the tech companies. These important and giant companies such as Apple, such as Microsoft, Apple, Microsoft, and Meta Platforms, and so many other companies that we're going to have earnings this week. They are all about to support the stock market. So generally, we are positive about the stock market, especially if the S&P 500 can hold the 6,000 level. But generally, with these numbers, we can be positive about the stock market. But we have to mention that holding the risk for lower can put the pressure on the stock market. So and not this week, from the week later, from the sixth, not seventh week of the, or we can say from the first week of February, we may see some pressure on the stock market after just like markets gets a little bit somehow we can say cooler, and the news and everything's getting cooler. So we may see some pressure on the stock market of February. But for now, we are still positive and we can hold our buy positions. And finally, in the cryptocurrency market, we can say for now the cryptocurrency, but from the technical point of view, holding the 101,000 US dollar could be positive and put the 115,000 in watt hours. But still, while this number is kind of the target from the technical point of view, fundamentally we need more reason to see the higher numbers. We know that the walls, they are buying the Bitcoin. We know the MicroStrategy added its Bitcoin positions. Still, the new administration, we have to wait and see what the new administration is going to decide as the regulation and stuff like that. And we should not forget that any law, any new law, or any changes in the law, they need the confirmation from the Senate and House. And most of the senators and the House members, they are older politicians, and they are not so much positive about the cryptocurrency market, despite the positive administration in the White House. So we have challenges there. So we have challenges to change the rules. Anyway, that's what we had generally in the market, and what we are expecting to see in the week ahead. If you have any other question, don't forget to write in the comment section, or try to get back to you as soon as I can. Have a good time. Bye-bye.